725 2020 weekly S&P 500 chart. We hit my target, and we did. And I just have to be upfront about it. And that was at 32.75, and the high for the week was 32.79. Now, we did have a 79-point reversal off of that high on this weekly. And yes, the S&P did not reach a complete overbought process. It was getting close, but it still didn't do it. Now, we have to talk about the monthly chart, my friends, because, once again, when you take a look here where that trend line was, we hit it right there, and we did. Now, the last 4 months, and I'm just going to tell everybody something. July 2020, the 52-week highs were put in on the other indexes, and the S&P has to come up and take out these highs over here. So let's just talk about what the old highs were. Is by year end, you're looking at almost 3,400 right here. Now, when we have taken everything out on this monthly level, we did get close to being overbought, but we do have the monthly major problem there. I will tell you that the 10-month moving average has been acting as a major catalyst to get us up to those highs, because the previous week we did get above it, and we did. But earnings season is upon us, all of my friends, and if you don't listen to me, listen. Those who don't listen get killed. Those who do, well, you do quite well. Now, having said that, the next thing for you to do is understand that the easy money has been made. And as we move through next week of a major calendar of big tech leader earnings, Amazon, Google, a whole bunch of other ones, and we just went through a bunch of the other earnings. Microsoft got crushed. We were short Microsoft. Everybody wanted to own it. That's when we knew we had to take the other side of that trade and bank the profit. Oh, yeah. There's quite a few of them, and we have reversals on individuals, and the volatility will increase by 20% moving forward. Once again, thing we like about the monthly on the S&P, it's about ready to pop a monthly buy signal. It's only minus 3.2. So if we can get that to happen, we would be able to take out this trend line that we're sitting on here on the monthly. Now, let's take a snapshot of what? The daily. Now, we're below the 10-day moving average because we started with the gap down on Friday. We had the major highs and the daily top here that we talk about. That is the reversal. The 10-day moving average was there. The trend is still pointing up. The 20-day moving average is going to be right around 31.75 or so. Not only that, that's going to be the catalyst. The 50-day moving average is down here. That would be 3,100 on the S&P. We're going to see what happens on the daily, and particularly in the short term. If the S&P does hit a daily sell signal, then those weekly reversals and monthly reversals will have a big play involvement. Let me tell you. I will tell you that the volatility will increase by 25% for you day traders. You're going to get your head whacked. You don't know, we are market makers. Learn how to be a market maker, understand the market maker, how the market maker operates, how you make money off of the public. That's what we're here to do, power you, how you make money off of the public. They're always wrong. So that is the reversal on a daily level on the S&P 500 bull market. It hasn't hit the daily sell signal in the short term. On the weekly count, though, we did hit that trend line of mine, and I told everybody that, and we hit it to the penny. But once again, listen, we could take a run at that high or a lower high. If we get a lower high reversal, then we're going to move in again and buy a bunch of put options on the S&P 500 and try to bank $50,000 profit real fast. Oh yeah, when those reversals are happening, hey, that money is printing, and we are market makers in the SPX 500 call side, put side. We're market makers in all of it. Something you haven't seen yet. Why don't you take the next step and see it live? Enjoy it. Make a new friend. Have a lot of fun. Make some money. Let's get together. Earnings season for this July period, this week, last week of the month, the volatility will increase by 20-25%. Oh, yes, it will. And put your seatbelts on for you new people. If I were you, I'd get in our live trading room before you get whacked in the price volatility coming up this coming week and the week after. And then the political risk thereafter. There's all kinds of stuff. Things, look at, easy money was made. S&P weekly still in a bull market run. Let it be known that we hit the trend line on the monthly once again. And we do have a 10-month support level, like I said. That would be a test, and then we would see if we could take a run higher. The problem is the seasonality change in the easy money. That tech stuff is over with right now. And that's what ran the market, and that was also a catalyst for the S&P 500 run too, because a lot of those big tech stocks in that index. Oh yeah, seems like the S&P 500 there for a while with this easy 4-month money rally. Be careful, everyone. Be careful. I've given a warning, and the warning is here, and the warning will remain throughout the rest of the calendar year.